What is going on, YouTube folks out there? This is a great time to talk about assumable loans. Like, the hell is that, Dan? What's an assumable loan, right? Well, your assumption or assuming another loan. Very big topic right now. I want to talk about it. I want to give you some details and information on why people are considering doing this. Now, I think this is a very niche, whatever you guys, anybody out there, folks, how you guys go with that. This is a niche or niche product that people are looking to get into to keep a lower rate or get into a lower rate. So before we get into this is a very popular thing going on, or at least considering a popular thing. Everybody's scrambling for different alternate routes of trying to get a lower payment, try to get into a house if they really need it. And always, people always come up to me. I'm a real estate agent out here in Las Vegas, and people always say, Dan, is now a good time to buy a house? And I always say, no. It's not the best time to buy a house. But if you need to buy shelter and you need to have a place to lay your head at night and you also want a fixed payment, then this may be an opportunity for you. Now, also investors out there are looking to invest into cash buying deals. I got a couple of them I'm working with right now. A lot of condos, a lot of townhomes. I just did a video on a townhome too. Check out Propyland, propyland.com. That's where my YouTube channel is at. Also, this is the Sound Off, and I also have a French Workbench podcast I do every Tuesday and Saturday that really encompasses everything Las Vegas. It's an Everything Las Vegas channel, just like this channel. This is a Everything Las Vegas channel, and today I want to talk about assumable loans and why are they important in this market. Well, I think there's a good part of it and a bad part of it, right? Pros and cons of assuming a loan. So what happens? Well, I'm a realtor. I go to the seller and I say, Mr. Seller, I'm going to list your house, and potentially we're going to put out there that we do take people, assuming that your property qualifies, to assume a loan, right? To assume that loan from the seller. Usually it's FHA loans or VA loans, and then also conventional loans. Now, conventional, though, it's a non-conforming product. That means Fannie Mae, Freddie Mac will not do it on a traditional conforming or traditional loan level. But if you did like an ARM loan, adjustable rate mortgage, potentially some of those loans are assumable. Now, when you go into this, you have to have a buyer that can be qualified with the servicer that you currently have, and they assume your loan, and they also assume the lower rate, right? That's what's important, the lower rate. Everybody wants that golden 2.5%, 3% rate. But there's a kick to it, right? There's a catch, right? So the catch is that you have to also, if you're assuming someone's loan, depending on how much equity is in the property, you have to cover the equity. So you could actually come into this property spending, especially in the last couple of years, where we've gained tons of equity. I know we've declined here, but you're talking maybe, 50,000, maybe 100,000, 150,000. Does that make sense to go in and put that money into a house? Maybe it does. Maybe you want that lower payment. Maybe you're somebody that's retired or considering retiring and you want to go in and get that done. No problem. But that's the bad side of it is you have to pay the equity in the property, basically paying that seller out to take over and assume that loan. You also have to get qualified with that servicer and making sure that everything checks off, right? So these are definitely on the table. I think everybody's really scrambling and just kind of looking at different avenues in this market. I said people tell me, is it a good time to buy? No, it's not. It's not the best time to buy, all right? So everybody should know that. Rates are high. Builders are doing this 2-1 buy down, right, which is helping buyers. My niche right now is I'm looking at a lot of townhomes and condos helping cash investors out. So if you're a cash investor out there, that's what I'm really focused on right now, because there's not a ton of deals, but there's some deals out there. The first-time home buyers, that's the other type of buyer I'm looking at or working with. And if I'm listing your home, we have a long conversation. We have to be real about your need to want to sell your house, or do you just want to sell your house? A lot of these sellers are needing to sell their house, and they may want to, but the ones that want to are just sitting on the sidelines, right? They're just listed it. There's a number they don't want to really drop. If you need to sell because you're leaving the state, or you need the money, or you need to cash out to maybe clear up some debt, hey, you know what? Or maybe you're trying to downsize. The big question is, where do you go after that? And I think that's where people are struggling. But that's the type of buyers that I'm dealing with right now, is cash buyers, and also buyers that are first-time home buyers that are looking to get into a property and maybe doing the 2-1 buy down. We've had, assumable loans on the table, but it's very interesting because assumable loans, they were not really a popular thing that people go and take a look at, especially back in the day, just because, when you look at assumable loans, it wasn't something that is being sold to the public. It's something that people just kind of look into and they may want to take over, but it's not always the best opportunity. And now it's like, people are looking at anything on the table. So assumable loans are out there. If you guys have any questions on assumable loans, let me know. Please leave any comments in the comment section. We could discuss, does it make sense, right, to assume another loan in this market? Do I have sellers that are able and qualified to give an assumable loan or have an assumable loan, or somebody come in and assume that loan from them to take advantage of that lower rate? And also, when did they get in their house? Because if they have a ton of equity, you could be spending a lot of money to get into that house. I mean, it makes sense for some. I'm going to say probably for most it doesn't, but it's still on the table. We'll continue to talk about these conversations in the future. You guys know this is the Sound Off. I'll see you guys at the next one.